What happens in the economy when the repo rate or the bank rate is increased by the central bank, that is the Reserve Bank of India? What happens in the economy to borrowings, to money supply in the economy? That's a question. Before we go to that, let's understand what is repo rate and bank rate. Repo rate is the rate at which the commercial banks borrow money from the central bank for short term credit, for short term. That is repo rate. And what is bank rate? Bank rate is the rate at which the commercial banks borrow money from the central bank for long term credit. For long term, that's the only difference. When repo rate or bank rate is increased in the economy, it will have the same effect on the economy. Number one, it increases the cost of borrowings for commercial banks. Commercial banks have to take money from the central bank at high rate of interest, we can call it. Number two, as a result of this, the lending rates of commercial banks will go up. The commercial banks will lend money to their customers, firms, at high rates. It will discourage borrowings in the economy because people won't borrow from the commercial banks at high rate of interest. As a result, the credit creation capacity of the commercial banks will come down, and money supply in the economy will come down, and price of the demand for goods and services will come down, and the price of goods and services will come down. It brings down inflation in the economy. We can control excess demand in the economy. We can control inflationary gap in the economy. I repeat again, what is repo rate? Repo rate is the rate at which the commercial banks borrow from the central bank, RBI, for short-term credit, and bank rate is the rate at which commercial banks borrow money from the central bank for long-term credit. As a result of increase in repo rate or bank rate, the cost of borrowings for the commercial banks from the central bank will go up. As a result, the commercial banks also increase their interest rate, which they give it to the firms or households. As a result, the borrowings in the economy will come down. It will discourage. As a result, the demand for goods and services will come down. As a result, the price of goods and services will come down. Inflation will come down, and credit creation power of the commercial banks will also come down. Money supply will come down. So inflation in the economy will come down. Excess demand will come down. Inflationary gap is reduced. This is a positive sign. If there is too much inflation in the economy, the central bank adopts to increase the repo rate and bank rate.